Hi, my name is Kelly Walker, and I'm with Walker CPA. I have an office here in Lancaster, and I'm hoping to open an office soon in Pataskala. Let's see, I got this big thing here in front of me, Diane. Anyways, today we're going to talk about taxes for 2021 and 2022. And the agenda, let me hit share screen. Share screen, where's that at? There it is. There we are. I'm going to talk about taxes 2021 and 2022 and the agenda. Let's see. There we go. The agenda. First, we're going to talk about what was proposed in the original tax plan put forth by President Biden back in July. And then we're going to talk about what actually did pass. We're going to talk about the standard deduction, what the tax brackets are for this year and next year. We're going to go through an example how your tax is calculated. We're going to talk about the capital gains rates and how he will pay for the infrastructure bill. And the IRMA, which is kind of interesting for people that are on Medicare. It's an important thing that you should know for yourself or for your parents, and some credits and some miscellaneous things. So let's jump in here. Let's talk about what he had proposed. So back in July, with the original infrastructure bill, which I think was like 3.5 or something, it was high, and it actually passed for like 1.75, but he originally had proposed eliminating what was called the step up in basis. And basically what this is, step up in basis, if you was to inherit a lot of like Apple stock or some property that's maybe worth a couple $1 million, you would acquire, right now how it works is the basis that you would get was what the basis was on the day that you got it, the day that the person died, that your relative or your parent died. That would be the cost basis that you would get for that stock or that property. But he wanted to eliminate that step up in basis. He wanted you to get the basis as, you know, what they originally paid for it. So that was a big deal because probably paid nothing for that Apple stock, next to nothing. And, you know, right now it might be worth like $4 million, but when you actually got it on the date of their death, it was worth $2 million. So that's a big deal that, you know, that's what he was proposing to generate income. He also was proposing to expand Social Security. So on wages up to $142,800, you have Social Security taxes taken out. He wanted to increase that to $400,000. Other things he had proposed was reestablishing the 39.6 marginal income tax rate. And if you were a household that made over $1 million, he wanted to impose that 39.6 tax rate on your capital gains. These are some of the things that he had proposed. So what actually did pass is they did not pass eliminating the step up in basis, which is good. And they did not change the Social Security, which is good. They did not change the tax brackets. They stayed the same as what they have been. And the capital gains rate, except for inflationary adjustments, was not changed. We'll talk about some of the rest of this stuff as we go along. So the standard deduction, and this is what it is for a married filing joint couple. For 2021, it's $25,100, and for 2022, it's $25,900. So let's say, for example, you're a married couple that makes $100,000. So off your $100,000, you take your standard deduction. Let's just round it off to $25,000. So then you only have taxable income of about $75,000. So that first $25,000 is not taxed. And also your standard deduction determines your filing requirements. So if you make under your standard deduction, there is not a filing requirement for you. Some other things to understand is there's still no personal exemptions for 21 and 22. And back when they increased, basically doubled the standard deduction, they capped the amount of state and local taxes you could take, which was like your real estate taxes and your state taxes and your school district and your local taxes. So the most that you could take on your itemized deductions was $10,000. Now they're talking about changing that, repealing that cap and maybe increasing that cap. So that's still in play. It's called the SALT deduction. So they'll probably address it in the current bill they're talking about now, which is Build Back Better. But right now it's still capped, but they're talking about changing that, which would be good. Also, last year, they allowed you, if you couldn't itemize and you took the standard, you still were allowed to take a $300 deduction for charity. This year, it's still $300, but if you're a couple, you get $600. And also, in the past, they would phase out your deductions, itemized deductions, if you made too much money. That is not the case right now. That phase out is gone. Plus, you can give, you can get a charity deduction for your, you can give charity up to your AGI. It used to be just 60% of your AGI. You can now take a charity deduction to up to 100% of your AGI, adjusted gross income. All right, here's your tax rates. So remember I said if you used to make $100,000 as a married couple, take off your standard deductions of $25,000. That leaves you with taxable income of $75,000. So what tax bracket do you suppose that you fall in? Well, some people might say, well, I'm in the 12% tax bracket. That is not necessarily the case. How it works is like you have $100,000 minus your standard deduction, you get $75,000, and then for this married filing joint, from $0 to $20,000, $550 for 2022, you're only taxed at 10% on that amount of money, and then for the next level, it's 12%. Let me take it. Here's an example. I have a couple. They made, let's see, they made $497,000 in gross income. They had some adjustments, and then they had some itemized deductions. That left them with ordinary income of around $428,000. So that whole $400,000 would not be taxed at 32%. It goes in levels. So after your standard deduction, this is for 2020, excuse me. The first $19,750 after your standard deduction is taxed at 10%. Then the next level is taxed at 12%. So this gives you an idea. So these people are actually in the tax bracket of like 35%, but their effective rate is 23% because of the way the different levels tax it. And I don't know if a lot of the taxpayers are aware how it is actually calculated. This is a page from one of the tax returns I do, and I usually try to give it to everybody so they understand. This is capital gains rates for 2021 and 2022. And this is important to understand too. A lot of people say, oh, capital gains rates is 20%. Not necessarily. So these are for married filing joints. So if you have an AGI for 2021 that's under $80,800, which includes your capital gains income, then your capital gains rate would be 0. This is AGI income. So it's really important when you are making decisions about selling stock or selling property that you have a professional person that you talk to. So if you're eligible to possibly get this 0% tax rate, you take advantage of it. Or you don't want to, like here in 2021, you don't want to go over $501,601, because that pushes you into the 20% tax bracket. You want to keep it under that $500,000, so you can stay at the 15% tax bracket for your capital gains rates. And also, this is only for long term. So if you have short-term capital gains, they are taxed at your ordinary income tax bracket, which is what we just talked about back here. So it's really important to have proper planning with the right people, so you don't have to pay more in taxes than you want to. So ways that he plans on spending.
Good. Well, let me tell you, I was going to offer you another.
So ways he plans on paying for the infrastructure bill, since a lot of the things that he had proposed in it happen. He said it, I've heard it several times. He's going to make the wealthiest Americans and the most profitable corporations to pay their fair share. And that's basically a 50% min tax on the biggest corporations. And I'm talking big corporations here. There's going to be changes to the U.S. multinationals and other U.S. business operating overseas. He's going to be subjecting more income to the pass-throughs and investment tax. So basically, and this is in the Build Back Better Act that's coming out, they're hoping to expand the net investment income tax to include small businesses and S corporations, which that's a big frown, I think. He's also hoping to close some loopholes, and the tax code itself is 75,000 pages. I don't know if you've heard the story of how Warren Buffett's admin person pays more taxes than Warren Buffett does, because a lot of these big business people know the loopholes, and he's hoping to close a lot of those. He's going to be charging a 1% excise tax on stock buybacks of publicly held corporations. Another thing, if you make over 10 million, he's going to charge you a 5% surtax, and if your AGI is over 25 million, you not only have the 5% surtax, but you have another 3% on top of that. So that is how he plans on paying for it, since some of this other stuff didn't go through. Other things he's going to do, he plans on spending more money and time on enforcement efforts. So right now the audit rate is probably like 1%. So a lot of people, I believe, are rolling the dice. For example, recently I had someone say, I've been trying to buy a house, but all my mortgage people say I don't make enough money to buy a house. And I said, well, let me see your taxes. And so he let me look at his taxes, and it showed that he only made and he has like a little nutrition shake business. And he says it only shows he makes like $600. I'm like, obviously you're making a living. I mean, you're paying your bills, but this says you only make $400 or $600. I said, you need to talk to the person that prepared that return, and something isn't making sense here. Things like that are going to draw big red flags. They're going to be looking for them, and you're going to want to make sure that you're following the rules and the laws. Another thing they talked about to help increase income was reporting transactions through the bank of over like $600. And then that number got raised to $10,000. But luckily there was a lot of pressure from banks and business groups about all the paperwork and just putting that into place, how much that would take. So luckily that effort there has lost a lot of steam. Another thing they're talking about doing is increasing the penalties for failure to file. And that's why it's really important to know your standard deduction and your filing requirements. Because there is some people say, oh, I don't have to file, I want to get a Social Security, I don't make enough money. And it's, you need to make sure, because if you happen to think in the past you didn't pay, but for some reason you sold a little piece of property, you might have to file. And if you don't file, you don't want to have to pay that penalty. Okay, so if you're over 65 and you're on Medicare, your premium right now for 2021 is $148.50. This is if your married filing joint income was under 176,000. However, I don't know if you've heard the scuttlebutt about, oh, you got to raise Social Security, got to raise of like 5.6%. Yeah, you did. You got a raise in your Social Security, but they also increased your Medicare premium and went from $148.50 to $170.10. So went up $21.60 or 14.5% in your Medicare premium. So what gives away, take it away. Also, it's really important for this to, I've had several clients get pretty angry. Said, I don't know why, Kelly, my Medicare premium went up. It's because they had a transaction and they increased their income over this. Last year it was 176, and then this year, coming year, it's going to be 182 for married filing joint. So if your income goes over 182,000, it's $182,001, then your premium goes up to $238.10. So you really want to, again, have somebody help you understand how important it is to keep it under 182 if possible, so you don't have to pay more in Medicare. Here are some credits that are available to you. It's the EV. EV stands for electronic vehicle. It's a tax credit. And the thing that you need to understand about this is if you go out there and you want to buy an electric car and think, oh, good, I got a $7,500 tax credit. Well, you're not going to get to use that credit if you don't have a liability. It's not a refundable credit. So make sure you can use it. Don't be sold on the fact, hey, you got a tax credit. You have to have a tax liability in order to use your tax credit. It's not refundable. The solar credits are still in place, 26% for 21 and 22. And Ohio has added a credit if you homeschool. Now, this isn't temporary homeschooling. This is if you actually homeschool your child, you know, the full year. So that's kind of nice that they let you take that. Other things that come into play, they're increasing the gift exclusion from 15,000. It's been up forever. They're increasing it to 16,000. Taxable estate is going up from, and that's another thing in his proposed plan. He wanted to have taxable estates begin at 3.5 million. They're currently at 11.7 million, and for 2022 they're at 12,060,000. Okay, so then there's the advanced child tax credits. Does anybody have any questions right now? I feel like I'm just reading this off. Does anybody want to talk about anything or have any questions? Go ahead, Sherry. You're on mute.
I wanted to ask about the solar credit that you put on there. Like,
Yeah.
if I just, like, does that mean I have to get a whole system on my house and it's 25% of the total cost, or 25% of the cost that year? Is it also one of those where I have to have a tax bill or a liability, or I don't get to use the credit?
So how would it be calculated? Be 26% of your cost, and it would go against your whatever your liability would be. I'm assuming you would have a tax liability. So yeah, it would help you in reducing your tax liability. Yes.
Okay. I think those systems are about as much as an electric car, actually.
Well, they say the price of like electric and gas and stuff is going to go up like 30%. Mm-hmm. So if you want it, if you are thinking of solar credits, this year and next year would be the time to do it.
Okay.
Anybody else? Okay, so the advanced child tax credit, I'm sure we're all aware of these payments that they've been dropping into your account. There's like $300 per child for under 6, and from 7 to 17, I believe it's $250 per child. And you could opt out of it. As of right now, those are not extended into 2022. They are part of the bill that's out there, Build Back Better. So we will see what happens there. And, you know, things change every day with these taxes. And when I prepared this, which was like a couple weeks ago, the tax was going to revert back to $2,000 per child. So I can't find where it is officially going to increase into 2022. But I would imagine they would keep it at 30,000 or 3,600. But I'm not sure they're going to do the advanced child tax credits, just dropping the money in the bank. We'll see. So these bills are so hard, they change so much. So as of right now, it won't extend in there, but we'll see what happens when they pass the bill. Last year, unemployment was, the first 10,200 was excluded from income. This year, if you got unemployment, it is taxable. So that might be causing some tax problems with some people. Things that your tax preparer will need when preparing your taxes. Right on the very front page of the tax return, they're going to ask you this question. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in virtual currency? So this is crypto, Bitcoin, and basically it's my understanding this is going to work similar to like how stocks work, and that you should get something from whoever you deal this with, and then you'll have to report it if you have a sale. As far as purchasing it, I don't know, but this question will need to be answered when preparing your taxes. And if you are handling virtual currency, your tax preparer is going to need to know that. Another thing that's really important for your tax preparer to know is the amount of your stimulus payments. And everybody should have got like $1,400 for some version of that if you qualified. And you should have got a letter shortly after you got that money put into your bank or what have you. It's very important that your tax return preparer has that information. Last year, I prepared tax return for somebody, and they said, oh, I didn't get a stimulus check. I said, okay. So I went ahead, prepared his return, sent it off. And of course, it was calculating that he was to get a stimulus payment. So he was going to get this refund with the stimulus in there. Well, then it got put in the queue to be reviewed, like millions of others. And then he was like, where's my refund? Where's my refund? I said, well, I think they're reviewing it to see if you got a payment. So in the meantime, he checked his bank and he said, oh yeah, I did get a payment. I said, okay, but they're not recommending that you amend your return. He said, well, I really want my refund. Can you just go ahead and amend it? So when I was sending in his amended return so he could get his refund, he got a letter from the IRS saying, oh, you know, we recalculated it and we're going to send this. So they can't, so that only made his waiting period longer. I don't think he's still at this point, and he filed on time, has still got his refund because he didn't tell me the original amount originally. And then we filed an amendment. Anyways, the bottom line is, if you get a stimulus check, you need to tell your tax preparer the exact amount you got, so there is no hang up with your return when you file it.
I have a quick question.
Sure.
It's about the virtual currency.
Yeah.
Will that be taxed by capital gains or income?
I don't really know that answer. I would imagine it'd be along that same line. I really don't know, because honestly, I have no clients that have that as of right now.
Okay.
And I went to a seminar last night and that guy just said, check no on that box. I don't know. If your person is heavily into it, I would definitely, if you were heavily into it, I would research it and talk to my people about that.
Okay. All right. Thank you.
And if you received advanced child tax payments, just very similar to the stimulus check, you're going to get a letter that's 6149, and your tax preparer is going to need that in order to prepare your taxes, and it better be correct. You better make sure you have that letter, and the right amount better be on the tax return, or your tax return and your potential refund could be held up. So if you get, I mean, that's what's wrong with these stimulus things. They send them out, and the first one was from the Trump administration, which looked different than the one that was from the Biden administration. And then I also had a client that thought the one that they got the first of this year was actually for this year. And I'm like, no, unfortunately, that was for last year. So we had to work with that too. So if you get correspondence from the government related to stimulus or advanced child tax credit, your tax preparer will need them. And that's my Arizona picture, because I love everything about Arizona. Any other questions I can help anybody with? What else can I talk about? Yeah, the Build Back Better. I don't know.
Sean has a question.
Who does?
Sean put a question in on the chat.
Chat. Okay,
Yeah.
what does it say? I'm
It
sorry.
says, what about the rumors about step up in cost basis being attacked when considering capital gains and legacy?
Oh, okay. Okay. He was proposing to do that, Sean, but it didn't go through. It wasn't in the actual infrastructure bill, so it's going to stay the way that we are used to it now. There is still step up in basis. It didn't make it through the bill that passed. So just continue to do like you're doing. I don't think they're going to change it. Not as of right now. It was proposed, but it's not happening. But this is, you know, I am glad that it's very similar to this year and next year, very similar, so we can kind of plan. Last year was messy because they were still changing 2020 tax laws in March. I mean, we went into the tax season thinking unemployment was going to be taxable, and then they changed it to not being taxable. And I just hope at the end of this year they have all the laws in place so we don't have to mess around with what needs to be done in the taxes. The tax software people really earn their money.
Are there any more questions? Sorry, Kelly. Are there any more questions for Kelly?
Hey, Carolyn, is there anything I missed? Carolyn?
No, I have been going to tax seminars too, and no, I think you, I did see last night in the news, it looks like there may not be any more changes, which is a good thing.
Yeah, I'm happy about that.
But I just don't want them to push that to next year, and then, like you said, in March, say, oh, okay, we're going to change the SALT tax, you know, and then we have to redo a bunch of returns like last year. So they need to give us a little bit of a break this year.
Yes.
But no, I didn't see anything that's on my radar. You know, people just have to look at their bank accounts. I just can't believe they don't look at their bank accounts.
Yeah. Yeah, it's really important that we have the exact dollars of advanced child tax credits and stimulus. I think PPP loans are going to be treated the same as they have been in the past.
Yes, everything I see on that looks the same. I had an email this morning from a lady and that I am on her mailing list, Mary Mellum. She's an enrolled agent out of, I think she's out of Michigan.
Okay.
And it looks like the PPP will be, everything will be just like it was.
That's another thing they changed as we were moving along.
Yes.
How about you, Diane? Have you seen or heard anything else?
Not lately,
No,
not
not really.
lately. Oh, I thought you were talking to me.
I did the Bitcoin is handled as the sale or disposal of assets. We do have some clients that have those.
Speaking of Bitcoin, I was in Nashville. I saw a Bitcoin ATM at Opryland Hotel. I had never seen a Bitcoin ATM. So
That's interesting.
I thought that was, yeah, I thought it was interesting too. I have one client that has the virtual currency, but there were no sales in 2020. So 2021 is going to be my first time. So Diane, I may be giving you a call.
I would move that one on up to the owner. He's the one that handles the Bitcoin.
Okay. All right.
Yeah, but he has dealt with it, and he said that it's also, people think that because they're doing it on the internet that like nobody knows what they're doing, but he was explaining to me that it's highly regulated and that they know
Yes.
who has this money and where it's at. And that's something that we're trying to educate our clients on, is like they think that they're doing something because getting away with something, and it's like, you're not getting away with it. You need to let us know. That's actually one of the questions we've been asking for the last 3 years. One of the very first questions we ask is, are you doing this so that a lot of them will say, well, I've bought some. So we just make a note waiting to see, okay, are they going to sell it? Because it's very expensive for those of you that haven't gotten into it. It's very expensive now. I think it's getting higher and higher in price.
$50,000.
Yeah. So
Wow.
luckily we don't have anybody mining it. So
I've seen those ATMs around town. Both in Pataskala and in Reynoldsburg.
Really?
Oh, really? I saw this one in Nashville and I thought, oh, I had never seen one. It was like in the hotel.
There's one, I think, at Ziggy's in Pataskala. And
really?
Yeah, I usually see them at restaurants. Oh, I think Winking Lizard might have one in Reynoldsburg.
Oh.
I see them in the oddest of places.
Yeah. Huh.
Wow.
Yeah, it's not something I'm interested in getting into.
Yeah, me either. Me either.
I think most investment people frown on it.
Yes, yeah, definitely.
When Elon Musk sneezes and it affects the value of your investment, I think there's a problem.
I think so too.
I like to pick on him, but I feel that way about anybody. Like, I mean, I've always known I've always been taught that the market is psychological, and we place value on things and it's all psychological. Why do we value gold? I mean, why don't we value pyrite instead? And if everyone's thought changed that, gold is not valuable, but pyrite is, then we'd be trading pyrite. But somebody along the line, throughout history decided that gold was going to be valuable. And here we are. Well, I mean, it's the same thing with crypto or whatever. It's what people place intrinsic value on is what becomes a currency. You know, I mean, at one point in history, salt was,
Yeah.
you know, salt was valuable, and you could, you know, things were bought with salt. It was more valuable than gold, you know, and
Or
like,
toilet paper.
yeah. So it's just ones and zeros. It doesn't even exist. It's virtual. And that's what makes it so scary. You know,
Right.
it's not tangible. I mean, you can exchange it for something a little more tangible, you know, cash, but it's just, it boggles my mind.
I don't have anything else. You guys don't have any more questions?
Kelly, will you be sending out your slides so I can go through them with
Diane
my
will.
staff?
Yes, I
Yeah.
can do
Okay,
that.
thank you, Diane. Okay,
Mhm.
great. Great. Good presentation, Kelly. I really
Thank
enjoyed
you.
Thank
these.
you.
Yeah.
Merry Christmas, everybody.
Merry Christmas.
Merry Christmas.
Merry
Okay.
Christmas.
Bye.
Have a good day.